Okay, so this is the third video for chapter 3 about income or contributions. Okay, so we have planned and deferred giving. Planned giving, essentially, again, commitments to give, or and then deferred giving. We do have, essentially, they're just notes or memos that certain members have pledged or have planned to give a certain amount to the church. But again, unless they are received, they're not going to be uh, recorded by the church. Okay. Most common examples of planned giving in the US. So they have charitable bequest pursuant to a will or similar document, gifts of life insurance, charitable gift annuities, and charitable remainder trust. Okay. Charitable because essentially these are inheritance or a share of the estate. So, for example, there's a person, and that person is kind of wealthy, has a lot of money, properties, okay, and then they have a will or just a list of people who will be receiving a share of their wealth. If they do name a church or an organization as a beneficiary of a portion of his will or property, then they would uh, be able to receive that. Okay? If it's unrestricted, there's no conditions in order to receive it or how to use the money, then the church can, of course, accept the charitable bequest. Okay? And then gifts of life insurance. Again, considerations would be the legality, the source of the life insurance, and if it's proper as well. Okay. For life insurances, normally the beneficiary would be the family or the relatives of the insured. So, for example, the parents, if they don't, sorry, the children, if they do have children. If they don't have children, it would be the parents. Okay. So normally those are the allowed beneficiaries. Or of course, if you're married and you have a spouse, then you can also name your spouse as a beneficiary. Okay. Other than that, here in the Philippines, I'm not sure if you can actually name a charity organization or a church or any other organization as a beneficiary, but I think it's possible. But again, for on the part of the church, they can accept it if there are no restrictions, if they would be free to use it in order to support their purpose and mission, and if they are sure that there are no conflicting interest with the laws and let's say relatives of the person insured, okay, who died, to have that proceed. Okay. And then life insurance also, the church would have to ask, are the premiums paid already, or would the church be expected to pay the premiums while the person is still living? Okay, because if that's the case, the church may have to reject such a thing, if they would be responsible for paying the premiums. Okay. And then you have charitable gift annuities. Of course, certain companies, certain people would extend gifts or annuities for the church. So again, if there are no restrictions, there would be no additional cost to, excessive cost to the church, then they can receive the charitable gift annuities. Okay. And then you have charitable remainder trust. For donor restricted funds, again, for the permanently restricted funds, the funds itself, the church cannot use it or the beneficiary cannot use them, but the fund can be put into investments, and then when the investments earn money, the earnings from that is what the church can use for their operations, right? That's in the case of permanently restricted funds, okay? Um, Essentially, trusts are, it's similar to that. Okay, here in the Philippines, we do have trust companies. Essentially, it's a service provided by financial institutions. It's a kind of wealth management service. Okay, if a person has too much wealth and they don't have the time to manage them, but they do want the funds to, of course, earn money, then they can put it in a trust or in a wealth management company, financial institution, and then that financial institution would manage the funds, and then if it earns money, then of course there's a sharing. Of course, manager the wealth manager would have a share as well as their company, and then the excess would be given to the, of course, the owner of the wealth or the money and the properties. Okay, if such trust or wealth fund, would be, if a church would be named as a beneficiary of the earnings from such trust, then again, the church may or may not accept that kind of donation or charitable remainder trust or bequest, right? So there is that. There's another issue I kind of forgot. What is it? Okay. This is the case in the U.S. as discussed in the book, but normally for Baptist churches, I don't think we do. Um, they can give churches with ownership in businesses. Uh, Shares or stocks are a form of ownership for stock companies, right? Normally, they could be private or publicly listed companies, right? And then if the business or if the company declares dividends, then the dividends would be received by the church. So again, it's a kind of earnings, okay? That would be received by the church, and then they can use it in their operations, right? But I think for Baptist churches, I'm not sure. It's from what I have observed. We do have this tendency to try and separate us from, you know, businesses or anything that would be seen as a business for the purpose of profiting from it. I think pastors do not want to be seen as, conducting the church activities for profit, because essentially that's not the whole point, right? That's not the purpose of why we have the church and why we are operating the church. Okay, so normally they try to separate the church activities from those kind of things. So in a way, it would probably be difficult to donate business ownership to churches here in the Philippines, especially Baptist churches. Okay. Um, it's a kind of, what do you call it? It's a matter of belief or the principles that we believe the Bible are teaching on how we're going to treat certain kinds of donations. Okay. Of course, in a church, it's fine if a member engages in a business and then they try to, sell their goods or their service to the other members of the church, right? That's fine. We can see that. I can accept that. But for the church management itself to do that, okay, to engage in a business activity, in a for-profit activity, and then sell it to the church members or engage the help of the members to sell the goods or the service. So normally we don't do that in Baptist churches. Okay. So again, it's a matter of belief and principles that the church believes in. Okay. Normally churches would again do that to avoid misunderstandings. Okay. Churches are normally operated as non-profit or not for profit. So again, they try not to engage in activities that are seen to be for profit. Okay. Something like that. Uh-huh. Charitable because, okay. For charitable because okay, sometimes the church would not know if they are named as a beneficiary on a will. So, what do you call it? They might not know until they receive a notice from a lawyer or the administrator of a will that they are going to receive a certain amount of money. But again, the church would have to consider the consequences, legal consequences, tax consequences, and then the possible uh, cost or additional cost to the church if they do accept the donation or the bequest. Okay, life insurance the same. There are inappropriate life insurance transactions. So let's say the church would be responsible for paying the premiums. That's not a good thing. Okay, the church may have to reject such a donation, and then sometimes members of the family of the insured would probably, question why is it that the church is the beneficiary, wherein the relatives of the insured are not named as the beneficiary. So there might be conflict in that area. So again, the church may have to reject such a donation. Split dollar, type of insurance, but we don't have that here in the Philippines. I'm not sure if I've mentioned this before. IRS is Internal Revenue Service or System in the US. So they're the tax collecting agency. Okay. Here in the Philippines, we have the BIR or Bureau of Internal Revenue. Again, they impose the tax laws or they implement the tax laws and they collect the taxes. Okay. Permissible life insurance gifts. Again, if there are no conflicts, the church would not need to pay premiums, then they could accept probably life insurance gifts. Okay. Transferring ownership here in the Philippines normally not transferable. Uh, Determining whether to accept a gift or of a life insurance. Of course, the church would have to analyze. Okay? You don't just accept donations as they come. Again, you have to analyze how it's going to affect the church operations. Okay. Charitable gift annuities. There's an example here. Simple gifts. Tax aspects. Again, they would uh, if they would be subject to donor's tax. So again, consider it and then ask the donor to pay for it. hmm Trustees, charitable remainder trust. What else do we have here? Okay, let's discuss this one. Clawbacks of charitable contribution. So again, there would be a type of risk associated with receiving uh, donations. Okay, so again, you have to make sure that they came from lawful activities. Okay, if a donation received was a result of a crime or an illegal activity, then the church might get involved in the investigation, and that's not a good thing for the reputation of the church. So have to make sure before you accept a donation. Uh, Kindly check if it's from a lawful source. Okay, if the donor has the capacity to give this much amount of money. Okay, and then when it comes to life insurance benefits, or if the church did not know that they were named as a beneficiary, and then family members of the insured are contesting it, so the church probably has a claim on the benefits, but just to be safe, don't use the money until the case is settled. Okay, you don't want to spend it and then have to return it later on. Okay, so wait for it to be settled, and then after that, if you're already free from any contest or from any claim, counterclaim, then just you can use it then. Then there's a sample gift acceptance policy here. you can probably, pattern uh, the policy of your church when you have them later on. Okay, what would be your conditions before accepting cash gifts, non-cash properties, okay, real property, intangible personal property like copyright, what else, patents. Those are the most common. Okay, and then you have your tangible personal property like vehicles, buildings, let's say supplies or inventories, okay, which can be sold. Okay. All right, so that's it for chapter 3, income contribution. So again, mainly the income of the church would come from the contributions from the members, but other times the church may receive donations from certain people. Could be member, could be strangers, but again, there are certain considerations that the church must take into account before accepting a donation. They may accept or reject a donation depending on how it might affect the operation of the church. Again, operation of the church, it must be for the achievement of its purpose and mission. Okay, if a donation would restrict the operation of the church, or if it would hinder the church from, reaching its purpose and mission, then the church may have to reject such donation. And the considerations, benefit and cost analysis, whether the benefits would outweigh the additional cost that the church may have to incur. And then secondly, legal implications. Are they from legal sources, or are these the result of unlawful activities? You have to check. And then tax implications. Are there taxes that need to be paid if we accept this donation? Who will pay for it? The donor, or will the donor ask the church to pay for it? So those are some. And then what else? Huh? The restrictions, maybe. Yes, the restrictions being imposed, if any, on the donation. Okay. So that was it for chapter 3 of church finance or church financial management, right? Next, we'll discuss chapter 4.